I wouldn't say it was a misallocation because they all made a lot of money by allocating assets to those places. So it's hard to say they were wrong for doing it when they made money doing it. However, the pendulum can only swing so far before the energy to keep it going in that direction is gone. And then it starts to swing back the other direction. And now that it's swinging back the other direction, I think it would take an incredible amount of energy to get it going back in the positive direction again. So I think the pendulum is going to swing to the other way. And it won't be in a straight line. Markets never move in straight lines. There's always starts and stops. But I think largely now the pendulum is swinging the other way. And I think whereas for much of the last 25 years, maybe not the last 5 years, but from 2000 to 2020, I would say the world largely worked together, cooperated, moved towards globalization. There was one supply chain. It was kind of the golden age of travel. You could pretty much go anywhere in the world you wanted as long as you had a passport and the money to do so. But since COVID, the pendulum has started swinging the other way. The world is no longer cooperating the way it was. Not only are they not cooperating with each other, but they're actively hostile towards each other. And so I think if another crisis were to come up, I don't think it would be dealt with in a cooperative and coordinated manner like the previous ones have been. And that's why I think the next one could be a little more volatile and could last a little bit longer than they previously have. And, going back to the misallocation, the idea of the whole milkshake was that after the world mixes the milkshake coming out of the crisis, all of that capital gets sucked up into the United States. And that largely happened. What you're seeing now is typically when a crisis starts, that capital that has flowed into the United States initially gets sold and repatriated back because the U.S. has sort of become the piggy bank for the rest of the world. The rest of the world invests in America because America has been the dominant market and the dominant growth area, especially since COVID. And so when things start to go south and things start to slow down, people have to tap their piggy bank. And that's what's happening now. What historically has happened is that if it continues to get worse after that initial tapping of the piggy bank, if it continues to get worse, then the dollar tends to do very well. So all the dynamics that are playing out right now are kind of scarily similar to 2007. September of 2007 saw a very similar episode to what we've seen over the last month. And February of 2020 saw a very similar dynamic to what we have seen over the last month. Now, in both of those previous cases, as things continued to get worse, money started flowing back into the dollar and the U.S. safe haven. That has not materialized yet this time, and perhaps it won't. But if history is a guide, that's typically what happens. And the reason that capital typically ends up flowing back into the dollar is because the whole world, the whole non-U.S. world, in addition to using their local currencies, they also use the dollar to interact with each other. That's called the euro dollar market. And I think a lot of people are maybe not familiar with the euro dollar market, but the euro dollar market, again, the dollar market outside the United States is bigger than the dollar market inside the United States. And I think a lot of people are familiar with the fact that the U.S. owes over $30 trillion in the domestic market. But I don't think people realize that the rest of the world owes even more than that to each other. They don't owe it to the United States. They owe it to each other in this euro dollar market. And that's what the currency that they can't print. Historically, the Fed has bailed them out. But now with Trump being in the presidency and his mandate for America first, I'm not sure that those bailouts to the rest of the world will come as quickly and easily as they have in the past. And so that's another reason why I think this time has the potential, at least, to be a little bit more scary and prolonged than the last few crises have seen. The last few crises we've had, have been relatively short-lived. They were perhaps dramatic and very scary, but they passed fairly quickly. I'm not sure that this next one is going to pass as quickly as the previous ones.
But then that'd be a power decision, wouldn't it? Because I think the Fed have control over the swap lines. Is that correct?
That's absolutely right. And so, historically, the reason swap lines have been used is because I don't want to get too far in the weeds here, but we live in a debt-based monetary system, which means all the money that exists has been loaned into existence, with the exception of the base money. So the base money is the physical coins and currency of US dollars and the reserves at the Fed. So that's considered base money. All the other money in existence has been loaned into existence. And typically when we've gotten into a downturn, the Fed has gone in and recapitalized the system by putting new bank reserves, base money, into the system. And that signal that the Fed is going to be there to bail everybody out then gets everybody else to go back to spending and extending credit and doing what they were doing before. And then the system kind of self-perpetuates. But the rest of the world does not have a Fed that can create dollar-based money to get the system going again. So that's why the swap lines exist. The swap lines exist as a way for the Fed to get those dollars to the ECB, to the Bank of England, to the Bank of Japan, et cetera, et cetera. I just don't think that those bailouts or those swap lines, I'm not saying they won't be extended. I think they probably will be extended, but I think they will have tighter strings attached to them than they had in the past. And I think in some cases they won't be extended at all unless you agree to a new tariff deal or a new trade deal or a new military alliance. And so with Trump coming in and kind of changing the way that the U.S. does business, I just think it's going to be a different game this time. And that again causes great problems to the rest of the world because they owe that money to each other. So if they default on that US dollar debt, they're not defaulting on the United States. It's Turkey defaulting on France, or it's Indonesia defaulting on Japan, or it's Australia defaulting on India, or whatever the one is, right? And so if the US doesn't come in and help recapitalize those systems as the credit contraction picks up speed, then that's how you get not only a credit contraction, but a potential credit collapse.